Leanne, you can't look past the miners, the iron ore miners in particular. Excuse me, but adding to the pain is the energy space, the banks as well.
Nadine, that's exactly right. Really seeing a lot of those sectors coming under pressure. But as you say, that materials sector, as expected, really is continuing to weigh. We are actually seeing some of those gold stocks holding up quite strongly. We did see gold prices overnight up close to 1%. But of course, seeing that iron ore price really falling now below 72 US dollars a tonne, that is adding a lot of concern around. And of course, coming out after that data yesterday from China, really confirming a slowdown in that property sector over there, which of course is weighing on that materials sector as a whole, seeing a lot of those higher cost producers, the likes of Atlas Iron, BC Iron and Fortescue, as you say, are really the worst performers. In the energy space, of course, continuing to see oil prices falling, and we are also seeing some weakness across that staples sector. Woolworths and Wesfarmers are continuing to drag that sector lower, but as you mentioned, financials, the other big sector of the market, really is continuing to drag as well. So unfortunately, really unable to hold up any momentum today, and of course that's despite seeing some pretty strong leads coming through this morning. I do think investors are still concerned about global markets, of course, after Japan has hit a recession. So certainly those talks about additional stimulus measures not coming across onto our market, not adding any confidence for investors, and certainly seeing a lot of those losses continuing that we have actually seen all week.
Yeah, certainly. And I guess a reflection of some of the pain in the mining space on the back of those commodity price falls is Orica, because it did have that announcement that it's selling off its chemicals business, but at the same time it's cutting as many as 700 jobs.
Nadine, that's exactly right. We actually did see a fairly strong performance in Orica this morning, which was quite interesting, but we have actually pulled back on a lot of those earlier gains. We are now seeing the stock trading down about 2.2% or so, but there has actually been quite a bit of information coming out today for investors to digest. They have come out with, of course, their full year result, which did look quite strong, despite the fact they have been facing some quite challenging conditions within that mining services company. Their earnings were down about 4%. Revenues were relatively flat, but we did actually see their net profits up about 2%. That was about 2% ahead of our forecast. And we also saw their operating cash flows very strong. They were up about 48%. So initially this morning, I think we saw a reaction firstly to the result, but also, as you say, selling off that chemicals business for about $750 million. It does look like that may potentially be higher than what some analysts were estimating. We had a value on that at about $560 to $670 million. So it does look like the business has been sold off at a good price. Of course, now looking to really focus on their explosives business, and we know that generates the majority of their profits. So I do think that looks positive for investors, offloading that underperforming business. Their earnings were down about 29% within that chemicals business coming out of the result. So certainly the result, along with offloading that business, I think initially provided some optimism, but certainly seeing that share price coming under pressure now as a result potentially of the on the outlook. The company is saying they are still expecting challenging market conditions to continue, and so I think that is adding a bit of uncertainty for investors. So interesting to see that share price really coming off from earlier gains, and it will be interesting to see how it does close for the rest of the day.
Certainly so. Same with James Hardie, up about 5%. Is this a reflection of the view on the U.S. housing market, keeping in mind that we do get an update on that front coming tonight?
Potentially is a view on that US housing market, although again it's quite interesting because the company has actually said that in the short term their view on that US housing market still does remain a bit concerning, but if they actually look medium to long term, their view has actually remained unchanged. But again, if we look at that outlook commentary, they have confirmed their outlook, their guidance, so that's always positive for the market, expecting earnings margins within their US and European fibre cement business to be in the range of about 20 to 25%. So again, that has been confirmed. And of course, they still do remain committed on adding about $600 million of manufacturing capacity over the next 3 years or so. But I do think that that US housing market is quite an interesting one. They have continued to see some improvement, although they are only expecting this to be at more of a moderate pace. So that's actually below what they were previously expecting. So again, quite interesting seeing the share price performance today. But if we do have a look at that result that came through, their half-year result, again, it was quite strong. We saw their underlying net profits up 7%, underlying earnings up 11%. And of course, that really was underpinned by strength in that US and European fibre cement business. As I mentioned, their earnings up 22%, sales up about 14%. So overall, it was quite a strong result. And of course, that's despite seeing a bit of an underwhelming recovery in that US housing market. So I certainly think that's what we are seeing a reaction to today, again, and potentially to that outlook commentary as well. So it really will be all about that US housing recovery, and as you say, some potential data out tonight.
Yeah, we're getting housing starts and building permits released in the US tonight, and of course that's coming amidst the US FOMC minutes, so it's going to be an action-packed evening and of course morning here in Australia. We'll chat to you then, Leanne.
Great, thanks Nadine.